Welcome to Financial Tea with Damilola.
Do you know that keeping all your money in a savings account can make you poorer? I'm giving you time to think about that. Yes, putting all your money in a savings account can make you poorer, even though you thought you were saving. And the reason is that the inflation is currently at 22%, and the interest rate that you're getting on your savings account is probably between 5 to 10%. So you can see you're getting negative return on your money. And that's why we're saying that putting all your money in a savings account can make you poorer. So today we'll be talking about savings versus investment. Savings means keeping your money somewhere safe, most probably in a bank or a piggy bank or maybe another type of fund that is safe. So the good thing about savings is that your money is safe and you have access to it when you need it. But the bad thing is that the interest rate you get on it is quite low. So you're probably getting between 5 to 10% per annum on your savings. So that is really low. Or some are just savings, like the ajo, and you're not even getting any interest on it whatsoever. So that is the bad part of savings. But the good thing about savings is that yes, you have access to emergency funds. You have access to your fund for maybe your daily needs and stuff. So that is an advantage for savings. And that's why you should have some savings. But if your goal is to be wealthy, you cannot put all your money in a savings account. And that's why we talk about investment. You have to invest some of your money if your goal is to be wealthy, or at least have enough to take care of your daily needs. Investing means putting your money in something that can grow, something that is growing and increasing even while you are asleep. Example of common investments that you can actually go into is treasury bills, is bonds. You can do mutual funds. You can try equities, which is also stocks, and real estate. But the goal here is that you have to know each and every one of this before you put your money into any. So you need to do your little research before you put your money into any of this type of investment. But the advantage of investing is you are at least going to be able to match inflation. Not in every one of the investing types I mentioned, but in most cases, you will get more than what you get in the savings account. The truth is, you have to have both savings and investment accounts. Savings for emergency, for short-term needs, for your school fees, for rent, for feeding. You need to have savings accounts. But then, if you want to grow rich or wealthy and beat inflation in Nigeria, you need to have an investment account. Like I said earlier, savings will only give you between 5 to 10%, while investment can give you a return above inflation. So what we mean is if you're getting a return of maybe 25% and inflation is currently 22%, so you're getting 3% real return. But if you're getting 5% and inflation is 20% or 22%, you're getting negative real return on your money. So when you are going for that investment also, you have to check it for inflation, check it for the interest rate you're getting on it, etc. But then investment is risky. Don't let anybody tell you investment is still risky. But like we say, no risk, no gain. So, but you have to also know what your risk limit is. How risky do you want your investment to be? If you are really risk averse, that means you're very safe and you want your money to be safe, then I would just suggest you try these two options first. Try either investing in treasury bills and mutual funds. So treasury bill is guaranteed by the government of that country. So for example, in Nigeria or the United States of America, the treasury bills are guaranteed by the United States of America or the Nigerian country.
You also get compounded interest on most of this type of investments discussed today. Thank you for watching.